The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. The Chinese yuan has been trading at its strongest levels in nearly a year, supported by central bank fixings, a weaker U.S. dollar, and China's persistent trade surplus. But beneath the surface, challenges from a slowing economy, property market stress, and deflation risks remain. At the same time, Beijing is pushing for the yuan's greater international role, from cross-border settlements to the rollout of the digital currency. So what does all this mean for investors in the global currency landscape? Well, to find out more, joining me now is Peter Chia, Senior FX Strategist at UOB. Peter, welcome back to the show.
Hey, hi Hongbin. Hi, everyone.
Thank you so much for joining us. Well, Peter, the yuan has been hovering around its strongest level since late 2024, supported by central bank fixings and a weaker U.S. dollar. How would you characterize the current state of the Chinese yuan?
I think compared to, say, April, the Chinese yuan is definitely on a more stable ground because essentially there's a pause on the US-China trade war. So that has caused, or rather that has triggered some recovery of Chinese yuan. In a very broad sense, it is still above 7, that's the 7 level against the US dollar. So in a sense, while it's stable right now, it is still reflecting some concerns about the Chinese economy.
Okay, so how much of this resilience is being driven by China's trade surplus and fundamentals versus policy management from the PBOC?
Correct. Like what I pointed out, the currency is stable right now. So a lot of it got to do with, I would say, policy management from the central bank itself. So why do I say that? It's because if you look at the way the currency is moving, somehow it's not really moving alongside the broad dollar trend. And it's very much a function of where and by how much the PBOC or the central bank in China is fixing or indicate the fixing price every day. So in a way, it's more internally driven rather than external.
So how are global factors like Fed policy or dollar weakness influencing the yuan's moves compared to, China's domestic economy?
Yeah, so of course, undeniably, there will be some influence from the broad dollar strength or weakness. Currently, we are in the phase of dollar weakness. So, but if you look at where the dollar is trading externally, like the dollar index, it has dropped more than 10% since the year has started. But if you look at where the dollar or how much the dollar has fallen against the CNY, it's only a fraction of that. So that definitely plays a part, but to a lesser extent compared when it comes to looking at dollar against the yuan.
At the same time, we're seeing ongoing risks in property market and deflationary pressures. So how do these weigh on the yuan's potential to strengthen further, Peter?
Yeah, so what you pointed out are negative factors for the yuan, which is the property market concern together with deflationary pressure. So both tends to weaken the currency. So these are definitely headwinds. In the near term, I would say this will not go away so soon. It will be with us for a while longer. So that will be a drag on the yuan potential to strengthen going forward.
Okay. Is there a ceiling to how far Beijing will allow the yuan to appreciate, though, given the concerns about exports and competitiveness?
Correct. We are still in the midst of US-China trade war, and this is not resolved yet. So given the context that trade volume or exports volume will likely to decline over time because there is tariff that's going to be imposed on Chinese goods. So competitiveness will definitely be a key issue. If you look at that, what this means also is that the Beijing will unlikely want the RMB to strengthen too much. So we look at it from on a relative basis where we monitor the CFAT's RMB index. So like what we've seen before in the first trade war back in 2018 to 2020, the RMB the yuan tends to depreciate against a basket of currency. So that being said, what this means is that going forward, while the broad dollar weakness will be the overhang, allowing some space for the yuan to appreciate. But against a basket of currency, the appreciation of the yuan will be very, very limited.
Okay. The offshore yuan has been trading near 10-month highs as well, Peter. So how significant is this for investors? Should we treat CNH as a more reliable barometer of sentiment than onshore CNY?
Yeah, I think in the recent years, we have seen is that the offshore CNH trades very near to the onshore CNY. When I mention near, it is to 1 cent or 2 cents at best. So what this means is that if the RMB onshore is looking at 7.11, the offshore CNH could be 7.12. So they're very close. So in fact, it's a very reliable barometer of sentiment, or rather a sentiment where if there's anything negative spilling over into the onshore market.
Okay. Well, in the longer term view here, how is China balancing its desire to internationalize the yuan with the reality of capital controls?
Yeah, I think over the longer term, clearly China wants to internationalize its currency. I think it's doing from the actions, from the small little steps that's trying to do. I think the intention is there and will continue to be there. But at the same time, it will be limited because of these capital controls that is still in place. What this means is that the currency cannot be freely convertible to other currencies. So it limits the use, it limits the influence of the currency per se. So until one gives, if not, the intention will have limited runway, at least in the near term.
So do you see the digital yuan as well meaningfully accelerating its role in trade reserves?
In fact, not really, if you ask me. I mean, the digital yuan project has been there for the last couple of years. But if you look at the proportion of the RMB in terms of trade or reserve, the needle hasn't really moved that much in the last couple of years. So, I mean, it's a good step in the right direction, but the uptake is not there at this current point in time.
Okay, so how does the yuan then fit into the broader de-dollarization trend we've been seeing in, global trade settlements?
Probably there's progress in global trade settlement, but we are still very far away from replacing, or rather the yuan replacing US dollars' predominant role in global trade settlement. So currently, the US dollar forms 60% of global trade settlement. But if you look at CNY, it is just under 5%. So definitely a lot of gap between these two. I mean, the change or the de-dollarization trend will take years, if not decades, to roll out. I mean, in short, there is still no alternative or what the markets deem as TINA in terms of US dollar currently.
So, Peter, given all these dynamics here, what's your base case for the yuan in the months ahead? Is there more room to run for the Chinese yuan?
In our base case, we are assuming or we are forecasting a stable yuan, and that is premised on our view that there will be a trade deal between US and China by the end of the year. So, of course, it could swing both ways. So, if it's positive, if they do get a deal by the end of the year, then we may see the CNY at current levels or slightly lower, as in the dollar CNY rate. Currently, it's about 7.14. It could be here or a bit lower. But of course, if relationships doesn't improve, there's no deal, and both sides continue to slap very high tariff on each other, then it could escalate out of proportion again, like what we've seen in April, and the dollar CNY could trade a lot higher than current level. So it is still very binary at this point in time, but we are, in a base case, we are still looking at a more favorable outcome, which tends to lead to a more stable yuan going forward.
All right, some great insights from you there. Thank you so much, Peter, for joining me today.
Thank you, everyone.
Have
a good day ahead. Thank you.
You too.
Bye.
That was Peter Chia, Senior FX Strategist at UOB. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.